every Tuesday, Josh and I do What Are Your Thoughts, and we do a mystery chart.
You just sent me the wrong doc.
I did. And every week I guess it. Dude,
Michael's very good. Michael's very good at this.
I look at charts. One sec, Josh.
My man.
So how are you? How's your summer?
Dude, did you get my text message? Straza texting me like, yo, Josh is always pumping my stocks.
Oh, am I? What are
you didn't get the text message?
No. When did you send it to me?
Dude, are you kidding me?
I'm terrible. You know I'm really bad at
that. Look at your text. This is.
But from what day though?
This is Straza slacking me that he sees a headline.
Oh yeah.
Which stock was it?
I don't know. But he was talking about it, and Straza was balls deep. And
Rocket.
But it shows up like in his like a news feed.
Yeah.
Josh Brown pumps whatever, and he
no,
owned it.
Pubs.
He doesn't pump anything.
No.
I discuss stocks.
It says
I don't pump.
Look, the news was IBKR Vol Pop Josh Brown mention was the exact headline.
What was it? What was the stock?
IBKR.
Oh,
IBKR Vol Pop Josh Brown mentions, and then Straza says, "I love Josh. He pumps my favorite stock."
I don't pump. Oh my god.
No, I mean you're just talking on TV, but he's happy when he owns the stocks that you're talking about on TV. Is all. Like that's.
All right.
I just think that's funny. Like nobody else thinks that's funny.
I do.
I think that's hilarious.
But tell him not to use that.
No, he didn't say pump.
No. Say Josh Brown.
He did say pump.
Manipulates stocks.
No. He did say pump.
Right.
No, pump. But that's how the kids talk these days. Moon, pump.
I know, but I don't talk that way.
YOLO, GM. You know, like that's just how the kids talk. Like he doesn't mean you're actually pumping.
Very confident in
It's
my
just it's just the nomenclature.
Oh, what do we think?
What?
Oh, you don't have your
You did it.
headphones.
I like Michael doing it. Wait, I'm locked out of the stock. Why? Hold on. I'm locked out of the stock. I need somebody to.
Dude, I have a fucking extra laptop.
Can somebody just invite me to my personal Gmail and don't say it out loud?
Extra laptop on his desk, please, with the stickers on it. There should be a book on top.
Is this the mayonnaise
this is
one?
disastrous.
Are you still using the mayonnaise email?
What are you doing? What?
I don't know. I don't know. Like the ears are backwards.
Here you go.
I feel like we're off to a horrible start.
Put them on your head. No, other way.
Are you sure?
No.
It says the left or right.
You know
on the
what?
inside.
You should
Yeah,
isolate.
we
should reset.
You should isolate what I just said.
Fake
That's
news.
a good drop. Like,
It's true.
Perfect.
right when the Dow is down 800 points,
We were off to
It's
a
true.
horrible
I feel like
start.
we're off to a horrible start. That's a good
200.
drop.
Wasn't I 100?
Probably.
You probably were 100.
You've been on like 18 times.
For real.
What about it?
I know it's dead. F***ing charge it.
Oh,
Do we have another charger?
Yep, we could.
Oh my God! How many factor authorizations?
Dude,
Not enough.
Does it ever end?
take my computer.
Very confident in my assertion.
Does it ever literally end?
Do you know if this was on the blocking chain, this would solve these problems? You understand? Nobody cares.
I got it.
Why'd you move this?
I got it.
I liked it where it was.
I got it.
You sure?
Yes, I'm in.
Don't worry about it, Trav.
You guys, I'm in.
Okay, is
Yeah?
there sound meter on this?
We don't need
You
it.
got like 2% battery.
No, 23%.
Hey, why isn't this
We're
working?
gonna power through.
I was about to hit the clap button.
Just turn your
That's
brightness
because you
down if
unplugged
anything.
this one. Oh, shit.
All right.
Hold on. I'm gonna clap.
Oh, our first time.
Yeah, I can get used to this.
Oh,
Back off.
you got it today, okay? Attaboy. All
Is
right,
this like your first time with the bombs?
Yeah.
let's go.
You're allowing this?
What are we waiting for?
Alrighty.
It's almost
Where's
Labor
your
Day.
computer?
What?
Where's your computer?
I'm going to a Broadway show tonight. I can't have a laptop. You can't check bags at off-Broadway shows.
He would know. He's
200.
Bro-
Today's show is brought to you by Neuberger Berman. Hi, folks. Let's talk about options for your portfolio's next move. Ultra short funds made sense when rates were rising. But with the market expecting rate cuts, it may be time to look at the Neuberger Berman Short Duration Income ETF, NBSD, one of the fastest growing ETF options from the NB fixed income team.
That's right. With lower yields likely ahead, NBSD could help mitigate reinvestment risk. Their experienced team keeps duration short and focuses on efficient income, always searching for the best value in fixed income.
And it's not just about returns. NBSD manages risk with a mostly investment-grade portfolio and limited interest rate sensitivity.
The world is unpredictable, but your cash flows don't have to be. We believe NBSD is a compelling choice if you want your money working harder.
As always, check the fine print and talk to your advisor. Learn more about NBSD, including important information about fees, risks, and performance at www.nb.com/NBSD. NBSD from Neuberger Berman,
Efficient income, managed risk. Really check. Ladies and gentlemen, episode 200. Do some shit over there. Michael's controlling the sound. All right. Guys, oh my God, we've now done this 200 times. What do we think about this?
Not bad, not bad, not bad.
All right. Before we begin the show, I want to acknowledge the people who make this possible each week. The people who literally work on this all week long. I just sometimes get to drop into the seat and host the show. Michael, too. We prep a lot, but these are the people who really bring the show to you, ladies and gentlemen. Number one, Duncan Hill, dunking around.
Duncan.
John Grayson, Daniel Para, Nicole Samarukova. Okay, and behind the scenes, Keith, Rob. By the way, Travis is in the house, our newest producer from San Diego.
Shout out.
Look at the tan. Look at the tan on this gentleman.
Dude, not bad.
All right, and of course, Sean, Chart Kid, Matt. So many others who make the show possible. Sean, did you point to John Grayson? Got John second. All right. Guys, welcome to episode number 200 of The Compound and Friends. We are live in New York City, Bryant Park to be exact. We have a fan favorite guest. Couldn't be anyone but him. Ladies and gentlemen, JC Parets is the founder and chief technician of TrendLabs, a technical analysis-focused research platform. TrendLabs drops a daily note called Everybody's Wrong.
You're such a dick.
It's so perfect. That delivers charts and actionable ideas straight from JC. So subscribe to Everybody's Wrong, which I myself have done recently. Can we just talk about what is TrendLabs and what your role is there? Because the people are dying to know.
Yeah, no question. I mean, listen, we built All-Star Charts. You were there.
Yeah.
People are like, well, why'd you start a blog?
I feel like we helped. We did our part.
Dude, are you kidding me? Everybody was like, JC, why don't you have a blog? I'm like, I don't know how to do that, right? Like Josh had a blog, Reform Broker, Perlman, Josh, Joe Fahmy, Greg
Barry,
Harmon,
Michael.
Barry Ritholtz. Well, Josh and I were Barry fanboys first, right? And we would read Barry's blog every day. And then eventually they met and the bromance and the firm and the whole thing, right? But for a while, Josh and I were just fanboys. So like we learned how to blog through Barry. And then Josh kind of like, Josh would write the rules of this is how you blog and this is how you source.
I did. I was a major asshole back then.
No, but you made the rules. And if it wasn't for you, it would have just been even more of a shit show.
Agreed.
Right? So think about it like that. And then so, All-Star Charts was a blog. It turned into a hedge fund. It turned into a research platform. We got acquired 4 years ago and, that was great. And then so we started Stock Market Media, which is really a platform to be able to help content producers, particularly in the financial industry, be able to monetize the work that they're doing, whether it be written work or video work, because as someone who, did that for so long and made every mistake and learned the hard way how important it is to have the proper infrastructure, you guys that have a very successful RRA know just how important it is to have the infrastructure to be able to scale.
Yeah.
And you made
you can't put, to your point, you can't keep putting out research if you're not being paid.
Yeah.
Like you could do that for 6 months on pure adrenaline, but at a certain point, there has to be a business model. Otherwise, why are you giving people information?
Right.
So, all right, that's really important. So what's TrendLab?
So then, TrendLabs is really just selfish to me. So while All-Star Charts was a research platform, still is, right? Very successful, that caters to hedge funds, financial advisors, individual investors, and writes research to help all these different investors with what they're doing. TrendLabs is specifically what I'm doing. What I'm doing with my portfolio, what matters to me, the newsletter, Everybody's Wrong, is very, it's very...
Very confident
come
in
on.
my assertion.
Yeah, you are.
Listen, at the end of the day, we're very
Thanks, Ben.
specifically looking for where everybody's wrong, because at all times, there's some extreme out there where positioning is completely on one side and has to go to the other. And dealing with hedge funds and financial institutions as long as I have, I know for a fact that that's how they have to invest because they need the liquidity to get in, they need the liquidity to get out. So that's just how I think because that's how markets work. So we're looking for those extremes.
You know, a lot of technicians are trend followers, and you are too to some extent, but you also have this contrarian streak to you, which is why I love the title of your letter, Everybody's Wrong. It's perfect for you, by the way. If I said to Michael, guess who the person we know is that just started a daily drop called Everybody's Wrong, he would know exactly
2
who it is.
seconds.
But can I just give a shout out to Brett Schaffer out there? That was his idea.
Okay.
So I don't want to take all the credit. It is a great name, but shout out Brett Schaffer.
It's pretty great.
Yeah.
But you have this contrarian streak to you where you are looking to lean the other way when everyone's at a particular extreme. And most recently, I think the last time you were on, we were laughing about the dollar. And obviously this year is one of the worst years. I think the worst year for the dollar maybe ever, 50 years. Right?
Yeah,
What's that?
yeah.
Okay. So I like that about you, and I think that's where you stand out versus other technicians. So we appreciate that. Hit the thing. See? We're like well, all right.
I read his mind.
All right, we're gonna start with something that's not technical, but I think important to the market. It may not be important to anyone's particular trading strategy, but it's something that's getting more attention. The Wall Street Journal pulled out all the stops today. They had 3 cover story articles on why Trump shouldn't fire Powell. One of them was, oh, what's the big deal? He's building this $100 million building for the Fed. Who cares? Another one was, this is going to be really bad for the bond market. And then another one was like an op-ed from just, when you read the Wall Street Journal's editorial board, when you read what they're saying, you should know that that is in practice the mouthpiece of the business wing of the Republican Party. So not the gun wing, not the anti-abortion wing, not the neocon wing. That's specifically Chamber of Commerce types and all the conservative think tanks in Manhattan. That's who's speaking when they write that way. And whether it's related or not, put this picture up. Do we have this? Don't fire Jerome Powell, Mr. President. The only way they could have been more on the nose is if they had also written like, please, right? Okay. When you see this kind of a full court press from the Journal, it tells you that people are really nervous that this might actually happen. And I want to put up this chart of the 30-year Treasury yield, which is back at 5%. We saw it break above 5% in early May, probably at the height of the tariff-induced inflation concerns. And now we're right back here. And I can envision a scenario where this breaks loose and a lot of the gains in the stock market from the summer go away really quickly. I'd love to hear what your take is because I know while you don't care that much about the Fed, you do care about intermarket analysis.
Can you throw up the last chart, actually?
Oh, that's great, actually. And then we'll just finish the show.
And then we could go straight to happy hour. No, because Josh is like, can we talk about the Fed? Like, don't you have enough like nerdy economist friends
I don't
that you need that when I come?
Yeah, I don't want to do like the gossipy side. I want to do the market impact side.
Don't front. You have friends that are economists. Like you have those friends.
Yeah, dude. Yeah. I'm friends with everybody. That's why I'm downtown Josh Brown.
Just saying.
What do you got?
You would have nerdy economist friends.
Yeah.
All right.
Broadway friends, economist friends. You know,
so well rounded. You know that he was an art history major in college. Josh Brown. Fun fact.
Didn't go well. All right. All right, what do you got?
So for me, it's less about the direction of interest rates and less about the exact direction. It's more about the rate of acceleration.
Okay, this is weighty.
So this hasn't done shit for a few years. And how has the stock market done over that?
Just fine.
Really well.
Pretty damn well. Yeah. So it's more about the rate of change and less about the direction. If interest rates are going up, but they're going up in like a nice, orderly manner, you know, is it going to have a major impact on the equities market? Are you going to have these major volatility swings? You know, that's not what I would bet on. But if you're getting major moves, like you saw the worst quarter in the history of the dollar in Q1, well, the stock market had a heart attack and volatility spiked. And well, that's what happens when the currency market and the fixed income market are having big moves very, very quickly. So it's less about the direction and more about the rate of change.
But what about the level? Forget the direction. Put back the 30-year.
Listen, this thing's a mess.
Is there a VIX for the bond market? Yeah, there is, right?
Yeah, the move in.
Is it doing anything?
It's about to break down.
Exactly.
All
So,
right.
So if the move index is about to break down,
So rate of change I get, because when things look like they're moving fast, it seems chaotic, and that makes people nervous, especially in
but it's
U.S.
not.
Treasuries.
But it's not so much that it seems chaotic. It's that the bond market is so big that if there's chaos in such a massive market that is $130 trillion bond market or a quadrillion dollar forex market, it's going to make its way into the stock
It
market.
is chaos. It doesn't look
It
like
is
chaos.
chaos. Thank you. Yes.
But what
exactly.
about the level, psychological levels? I don't think that 5% means anything per se, other than it means something to people.
dude, it means nothing.
Josh, how many people do you know look at the 30-year yield? Not including your
Is a
nerdy
spi-
economist
Oh,
friends.
here's my question then. Is a spike in the 30-year yield more concerning than a spike in the 10-year yield?
No.
It's more of a curve thing, but I mean, the 10 year
Wait,
is the
hang
benchmark.
on.
But yeah, that's part
Everything
of it.
is based off the 10-year. The 30-year is not breaking out. The stock market is hitting an all-time high literally right this second. This is a news story. It's not a market story, because if it was, the bond market wouldn't be doing what it's doing. It's doing nothing.
Would it be a market story at 6%?
I don't know. Tell me
I bet you it would.
I agree, but tell me what the market's doing. Right now, the market doesn't care because he's not firing Powell, and everybody knows it.
Why don't we actually just turn to the market? Right.
Yeah.
So if you want to throw up
Let's do it.
the inflation adjusted securities,
He
that
doesn't
should be
have
just
to.
above
He doesn't
that.
have to fire Powell. Powell's gone.
Everyone
in
knows.
10 months.
Everyone knows he's not firing Powell,
Right.
which is why the market doesn't care. It's a
Okay.
news story, not a market
I
story.
don't know who's firing who, to be fair. Yeah. So if you throw up so this is the inflation protected treasuries versus nominal yielding treasuries. So instead of like us pretending we know anything about inflation, we could just see what the bond market's thinking.
Like,
and I
where are
trust
they
the bond
actually
market.
pricing?
Yeah, I trust the bond market more than the three of us combined, right? You got that, John?
I'm looking, man. You got 61 charts in here.
It should be right above. It should be between the crude oil. It should be a crude oil right above the dollar. So the point is, come on, John.
I'm getting there. Here we go.
No, so the point is that the bond market is now starting to it is inching higher, right? And when you see what happened in the gold market, making new all-time highs, gold tends to be a leading indicator in commodity super cycles.
Is this your chart?
This is the chart, right?
Okay.
Copper should be next, oil after that. So we'll get back to that in a second. So here we're looking at the inflation protected treasuries, the tips, right? Just the tip versus the nominal yielding treasuries. This is the 7 to 10 years. So these are equivalent durations, right?
IEF, ETF. A lot of
right.
advisors use this for their ladders and their fixed income allocation.
It's the 10-year, but the bond side, right?
Yep.
And now we're making new multi-month highs in the ratio between the inflation-protected treasuries versus the nominal yielding treasuries. In other words, what the bond market is pricing in for inflation, and it's not breaking this massive top that, if you read like 2 chapters of a technical analysis book, you'd be like, oh shit, head and shoulders top, everything's gonna crash. Actually, it's usually a continuation pattern, and this is turning into one. So if you go to the oil chart, so when I think inflation, correct me if I'm wrong, the first thing I'm thinking is oil. You had a pretty nasty failed breakdown in the oil futures and quickly recovered. Now you pulled back. I don't know what's going to happen in the future, but if you're interested in what inflation looks like, I would look at the bond market, and then I would look at this chart right here.
Crude oil
Dude,
futures.
open your computer and tell John what charts you're pulling up.
No,
we have
this is
a
it.
billion
That's right.
charts.
No, that's right.
So every one of these is telling the same story, which is that inflation was becoming more and more tame, and now that's reversed. Some of
Maybe.
it is tariff. That's what they all seem to be saying. It's not saying like we're going back to 9% inflation, but like
What is the stock market saying about inflation?
we're not going to 2. It's not the direction right now.
I'm more interested in what the bond market, it's not that inflation's here and there's this epic inflation, but if you show that inflation chart for the bond market, like it's worth monitoring. And crude oil with that setup is worth monitoring. And think about it like this. In these commodity super cycles that historically don't just last a few years, they last for a decade or 2. So if you're saying that commodity bull market is over, then you're betting that this is the shortest one of all time.
But back to the original premise of the question, the 30-year is not as important as the 10-year in terms of the way people price assets and allocate. What a breakdown in the 30-year bond and a rally in the rate could be indicative of is people worrying about the long-term health of the economy and the debt situation. That's why people pay attention to that. I don't think they would use it as a stock market signal. It's more a signal of like maybe longer term risks.
There's enough talk about this because it's not breaking out. It's at the higher end of the range. If it breaks out, we'll talk about it.
My thoughts are more on the market implications
Okay.
of such a thing. And this is how I look at it by thinking about gold making all-time highs. Where's copper? Copper ultimately broke out. Biggest day ever in copper last year. And you can start at the top,
There we
John. Go back to the top.
Copper futures.
Copper future. Biggest day in the history of the copper futures. This was last week. So
Why did that happen? Was there news? I know you don't care about the news, but was there news?
There was news.
there was
tariffs.
The buyers were more aggressively buying than the sellers were selling than in any other day in the history of the copper market. But the point is, gold first, copper second. What's number 3?
The yen?
Oil.
It's oil.
Yeah.
So we'll see. I got to see it, but that's what would be logical.
All right. Here's how we're going to do the show. I have some horrible charts, but they're points that I want to ask you about.
Okay.
Then we're going to run through yours like a marathon.
Done.
And then I have some more bullshit on the other end of that. Okay. I just want to say for all the things that have happened this year, the one thing that's like remains constant after these storms pass is that large caps are going to large cap. Like it's almost unbelievable to me. And I want to show you
Perlman. I mean, we're buying small caps, bro.
I want to show you the FTSE 100. This is Great Britain's stock market, okay? These are English stocks. Just broke 9,000 for the first time ever.
Can I just stop for a second and just tell you how happy I am that your first chart is like
The
a
FTSE
chart
100?
of the United Kingdom?
The FTSE 100.
Like it brings a tear to my eye. Like, you know how happy that makes me,
tell-
Josh?
like if you're assuming you're not
Sure,
being
come
facetious,
on.
why?
Well, we've known each other for a long time, and this is the first time that you've ever done that, actually.
Okay. We started with England. Okay.
Every conversation that you and I have had for 20
I'll take
years, when have you ever said, hey, JC, that fucking British stock market, huh?
All right.
Not once.
All right, here's my next horrible chart. Here's IFA. This is the ETF for developed stocks ex-US effectively. But it's Europe, Far East, and Asia. Like
A lot of Europe and Japan. Little
basically. This is at a new record high or just breaking out. Just breaking out right now. And we could have like really long conversations about dollar hedged or blah. But like the message here, I just find to be really interesting.
Well, think about what's in there. The German DAX is at all-time highs. Euro stocks is at all-time highs. The Japanese
The UK.
Nikkei, finally, since 1989.
The
Remember, I
CAC.
told you it was going to be resistance.
The CAC.
A year and a half of resistance. CAC a little underperforming
You
a
see
little
what I
bit.
have
but
in
yeah.
my bottom pane? Do you ever look? This is rate of change, and I did a period of 6 months just to kind of show this is at the upper end of the range of rate of change for this particular ETF since inception. Like, it's very rare that this thing has had as good gains as it's had in the last 6 months, just going back through the history of the thing. Like, this is, I don't know, 25 years worth of data. It's very rare that you get these markets rallying to the extent that they are. I thought that'd be interesting to look at.
Well, think about what's in there. So you don't have a lot of tech. You've got a lot more financials, industrials, these European,
for sure.
Germany, France, ton of industrials, right? So it's a very different
Consumer
composition.
discretionary.
You're getting more of a New York Stock Exchange composite kind of look at the market.
Yeah. I like that they're rallying and it's coinciding with the S&P new high. We've seen that before. The last time I can really remember it being this pronounced was 2017. You remember global synchronized growth was like the theme of the year that year, and every market around the world was ripping. That was a great year for investors.
2017 was the least volatile year in the history of the stock market.
Yeah.
This was immediately after
The
Trump
VIX
was elected,
averaging
and
like
we were
8
told.
or 9 or something. It was crazy.
It was like how many days in a row without a 1%
I think
move?
the max
It was
drawdown, the max drawdown was like 3%.
It's a joke.
I want to get your take on the market, and I want to start with this. Like, just overall, before we rip into a billion charts from which there's no escaping your voice, I want to get your take on the market and start with this. So
No escaping, John.
you have an
Like,
awesome.
he's like
Wait,
in, like-
I'm giving you flowers, as the kids say. You have a chart at TrendLabs that shows asset managers and hedge funds net positioning. Did you bring that with us?
I did.
Okay. So Dietrich tweeted, nice chart from JC that shows hedge funds and asset managers have missed this rally. There are pockets of optimism. Obviously, we're at all-time highs. But this likely says this rally has plenty left in the tank. What do you say?
Well, I mean, like we joke here, like, oh, everybody's wrong, but that's specifically what we're looking for, where everybody's wrong. And it's really the lack of positioning in the market overall. Like short term, can we get corrections in the market? Yeah, but bigger picture, there's like an underlying put in the market because we're coming off such extreme pessimistic levels. Depending on how you calculate it, this spring, we were at levels that we maybe have never seen. more pessimistic than at the COVID lows, at the great financial crisis lows, the dot-com bubble lows. And maybe that's a little extreme. Maybe that wasn't the case. But the fact that it's even in the conversation is enough. Like, people were angry. The Economist magazine, one after the other, angry, like, you know, the bald eagle, like with bandages and like crutches coming out of a hospital. Like, if you're not buying
in fairness, though, the only reason we didn't end up down 30%, we were down 20%, is because they changed their minds. And maybe it's because they looked at the market and they said, this is going to get a whole lot worse. This is not worth doing.
Well, I don't know who they is, but what I can tell you.
The White House said, forget everything we just told you. We're now going to negotiate.
Oh, because I'm going to start trusting what's coming out of the White House now.
I don't trust in either direction.
So
I'm pointing out there's a world in which that pessimism is like well-founded if that tariff shit would have continued.
To be fair, there are plenty of people that still live in that world. Fortunately for the rest of us, and they just are waiting for the world to come to an end, and the exact opposite is happening. So we're thankful for those sorts of individuals, and that's what the newsletter is all about. Everybody's wrong is not only identifying those who are wrong, but extracting dollars for our own selfish endeavors from those folks.
You're gonna call people out, like specifically who is wrong? You're not gonna do that.
No, sell side analysts, economists.
You're not gonna use names.
I mean, if they write the article on the cover of the Economist, somebody could go look at. I'm not calling anybody out. It's more of just a consensus. I was sitting right here at this chair at the beginning of 2023 when every sell-side analyst on Wall Street said the market was going to go down. It was Wall Street sell-side consensus was that in 23 the stock market strategists, the stock market was going to fall. Not only did it not fucking fall, the S&P 500 was up 20% 2 years in a row, and the Nasdaq doubled.
Yeah. So what about today?
And this is when the sell-side community is telling you that the stock market's going to fall for the first time this millennium, by the way.
Let me ask the obvious question.
It doesn't happen all the time.
Let me ask the obvious question then. The consensus is now bullish into year end. All the analysts revamped their $6,900, $7,000 targets for the S&P. Are they all wrong today?
Well, I'll tell you this. Listen, if I worked for a bank, I'd definitely pick 6,900 as the target just because I'm a child like that.
Yeah, Michael would too.
I mean, how can you not?
69,
right?
69.
69 would be his year-end target, but every year.
and then so the fact that they're bullish, that's not information.
Yeah.
And they're not all bullish. They're
when they're bearish.
So that's interesting. It's a better contrarian signal when Wall Street is bearish just because of how rare that is. Yeah, I agree. I would agree with that. It's actually common for them to all be 8% above where the market is.
Look at financial advisors, right? We look at financial advisors. We look at newsletter writers. We look at individual investors. They're bullish in bull markets, right?
Yeah.
You need bulls to buy stocks to have a bull market. It's when they're extreme pessimism that we want to flip the book.
So right now we're at NVIDIA 4 trillion. Josh finally gave people permission to trim a little bit. How quickly we forget. You remember what the drawdown was all the way back in April? It was at a 37% drawdown. 37%. The biggest stock in the world.
2008.
Was 37% or all-time highs now.
Hold on. Settle down. Zoom out and do the math on what NVIDIA did going into that 38% correction.
Okay, no, we're making the point that people think that we're owed pain in the market. What do you call a 35% drawdown in the biggest stock in the market?
In 3 weeks.
3 weeks, that's pain.
Haven't we had multiple bear markets in the last half decade or something?
We had three.
Now you want another one?
We had one 2 months ago and we had one in 2022.
And 2020. We had 3 in 5 years. We're good.
All right, chart us up. Let's go.
Let's go. Let's roll.
John, this is where you really got a chance to shine, my
let's
friend.
go bowling.
Dude, I haven't been bowling in a minute. Okay, question. Short interest data. Who publishes it?
NASDAQ?
Oh, I think the exchanges.
Wrong.
Okay.
When does it get published?
All-Star charts, am I right?
Nope. When does it get published?
That's a good question. Wait, let's see if does Rob, who publishes short interest data?
So Rob Passarella, ex-Bloomberg, just Wall Street legend. Now you got $6 billion in asset managers here.
Who is
no
it?
idea when the FINRA publishes it.
Oh, interesting.
How often?
Quarterly?
Quarterly?
Every 2 weeks. Where does it get
everybody
published?
is wrong.
Where does it get published?
Twitter?
I rest my case.
The beige book.
My argument. What color is that book? So
what color is the beige book for a bonus point?
Seriously.
Listen, my argument here in that everybody's wrong is that you two are two of the smartest market participants, Wall Street guys, financial advisors, whatever.
Not short
block,
sellers.
All of the thing. Fine, but you guys know your shit is my point. And even the guys that know their shit don't know where to get this data, when it comes out, where to find it. And then, by the way, if all those answers were a yes, this is what you get.
What is
this?
this nonsense?
Exactly.
How do you extract the data?
Well, you have to be able to
You
see
need machines, you need humans, it's like a thing.
So in the defense of everyone that doesn't know this information, this gets distributed via Dow Jones. It's everywhere. It's in Barron's, Market Watch, CNBC.com.
Wait, what is literally the point
And
of
by
this?
the way, it's never not wrong, by the way.
I thought we were doing
charts.
charts here.
Hold on, let's go. Keep going. Hold on, ready? This one you might know.
Commitment to traders.
This is a
Okay, there you go,
this
Josh.
is a
right off
government
the bat.
report. Oh, CMA.
So this I
When does
see.
it come out?
This is more frequent than monthly.
Is this the
less.
69th Tuesday of the year?
It's always on the Friday after the 69th Tuesday.
It's the second Tuesday. It's the Tuesday after the second Monday.
Is it only month?
Every Friday.
Oh, I thought
Every Friday.
Okay.
But if you go to the CFTC and you look for this, there's going to be 297 links. How do you even know which one to click on? And when you do, this is what you get.
Thank God I don't trade commodities.
Good luck.
Yeah.
Good luck. So
Look at
anyways, we
this.
take this information. The reason for this is because we take this information and here's what we do. Go ahead.
You machine learn it?
Dude, AI is sick, bro.
All right.
I don't want to go down that rabbit hole, but there's a lot going on there. So anyway, so then we take this data, comes out every 2 weeks. This is the short interest data, and we're looking at the increases and decreases in the short interest, and we're adjusting by the size of the company.
And you buy them, right?
No, we don't want to be
Not always.
No, we don't want to be contrarian for the sake of being contrarian.
But
That's called being an asshole.
They go on your screen of watch these.
Listen, if they're increasing their short positions as the stock is making new highs, I want to know.
And what do you want to do with that?
Well, then we look at the charts, right? And we apply our principles.
Wait,
But this is a great starting
point. Can we go
point.
back one?
Yeah, go ahead.
So, like, let's give people that are listening an example. So you're saying like GameStop, category, specialty retail, market cap 10 billion, change in short interest. This is month over month or
This is
2
report
weeks?
over report. So it's a 2 week
Bi-weekly.
change.
So it's being sorted by the right. I can't
Up
read that. What is that?
67%.
So it's sorted by the right. So
What
this
does that say?
So this is an increase in the short position as a percentage of overall market cap, right? Because if you're
Okay.
just looking at the biggest changes in short positions, you're going to get the biggest companies. So you got to adjust by market cap, right? Those are things you learn the hard way. So we're looking at basically the biggest changes report over report.
Everyone's shorting GameStop again would be my takeaway from this.
And Big Bear. Now
Good luck
remember,
with
this
that.
data is delayed because I don't know why they're not using the blockchain chain, and we have to wait like 10 days for them to report it. Like, I don't know why we have to pretend we're cavemen. Like, we have the data, like just report the damn thing. But anyway, so keep in mind, it's a little bit delayed, but still really good information. So here, you can keep going.
Whoa, hold up. Iron just had a massive short squeeze. Holy shit.
Yes. I mean, we're going to get into that, but it's all of those types of stocks. So then we sort by 10-day rate of change, right? So now we're looking at the names that have super high short interest, super vulnerable for a squeeze, and now we're sorting by the ones that are literally getting squeezed.
The rate of change tells you the squeeze is on.
Yep.
Bro, pro kidney, that went from $1 to $7 in like 4 days.
Yep.
Oh my
do you know
God,
that?
because I just pulled it up.
Oh, okay. I was just saying you followed pro kidney.
But you see the thought process. I'm mostly not just going to dive into individual securities, but to like walk through the thought process of taking these reports.
So Open Door seems to be the short squeeze everyone's talking about this week.
Shout to Eric Jackson.
Yeah.
What a run. Unbelievable.
Yeah. Okay. All right. So that's enough.
Also, I want to highlight RCAT. So this is the type of market environment. I'm going to put my fundamental hat on.
Red Cat
Yeah.
Holding.
And the
Is that
hell
the
is
guy
this
from Barstool?
garbage?
No,
What is
listen.
this?
This is the type of market environment where if the name of the company has an animal in it,
You buy it.
like
Double short.
like a pony AI or a data dog,
Yeah.
like if there's an animal
Crazy.
in the name, like this is the market where
It's going up.
you got to double the position if there's an animal. So I want to highlight
You
Red
should buy my
Cat.
publicly traded winery. It's called Grape Ape. It's going way higher.
Dude, so you, Energy Fuels. Look, it just
That
went from
just sounds like a fake
Dude,
company.
Look at this.
I know.
Holy shit.
It went from 6 to 9. Nice. In like literally 2
Why-
weeks.
So, all right.
Hold on, let's get into the charts. I just wanted to walk you through the mentality, thinking logically through about exposing those who have overstayed their welcome, the short sellers that are getting greedy when now the risk versus reward profile is skewed in the other direction and we take the
Why
other side.
aren't these people subscribing to your report? Like the people that are short selling.
I don't know. I'm good. I don't care. Go, keep going. So now we're sorting by days to cover. So go back to the last one. So this is important because now we're taking the average daily volume, and then we're taking all of the shares that are short, and we're calculating how many days at the average daily volume will it take all the shorts to cover.
Dude,
Right?
you should rename this. You call it the divergence equity squeeze. You should call this the divergence now you can't leave.
Ooh, now you can't leave.
Right?
Dude, that's the second Bronx Tale reference like today. It's a lot of Bronx Tale references today. All right, let's get into some charts. But I wanted to show you sort of the thought process behind these things, looking at the short interest and what we do with these reports. Not to mention, I want polling my smartest friends to see how many know when this stuff comes out. And the answer
don't
is
know.
still a squadoosh. And it's nothing against you guys. Nobody knows.
No idea.
No idea.
Yeah.
Okay. S&P 500 new all-time highs.
Bearish?
Not things we see in downtrends. Right? Obs. Right. Okay, keep going. So this is the chart that Michael was talking about, where we're taking that data that's coming from the Commitment of Traders report, and we're taking what the asset managers, these are the large speculators, what they're doing. You know what they're not doing? They're not participating in this historic rally is what they're not doing, because they're worried about like nonsense like tariffs or who the president is or fucking global debt or whatever, and
Will
like
Jerome Powell be fired?
wars.
Yeah.
There's a war in the Middle East. Big shocker. I can't believe it.
Yeah.
There's a war. So we're
Yeah. Who would have thought?
I can't believe it.
Yeah.
Oh shit, the Strait of Hormuz. There's issues there. I can't believe it.
Well, I said it. Anytime you hear the word Strait of Hormuz on financial television, just find something and buy it
Dude,
immediately.
Dude, I love how
It
like
doesn't even matter what.
all the AI experts and like chip logistics experts are now like Strait of Hormuz
Yes.
experts.
Overnight, we're so
Remarkable.
fortunate. We're so fortunate.
How lucky are we to be able to follow such geniuses?
Yeah.
Okay, so nevertheless, the hedge funds, the asset managers, they're not in, which is fantastic. That's the type of thing you tend to see in the early stages of strong uptrends, is people not participating, people not buying
Does
into
this
it.
ever resolve to the downside where the asset managers and hedge funds being lightly allocated to stocks end up being vindicated?
Yeah.
Or does this always is the resolution almost always, oh shit, we're missing the bull market and they buy?
Let me tell you something, Josh. There's a really smart gentleman by the name of Barry Ritholtz, and he just came out with a great book about how not to invest. And one of the things he says answers your question, as a matter of fact, that you should not be betting with those guys, right? You should not be doing that. Great book. Can we give a round of applause to Barry Ritholtz? JC gets a couple of shout outs. He misquoted me on one of them.
It's a 9,000 page book, so I'm not surprised there's at least one shout out to you in there. All right,
Next.
let's continue.
So no, I'm not betting that they're going to be right, is the answer. And neither is Barry, apparently. So there's a big question, and I want to hear your thoughts. What's the most important sector in the market?
Technology.
You?
For today or in general?
In life.
Financials.
No, it's always tech. No, it's not. Okay, fine. Somebody want to dap me up?
No, I
'cause
knew
said the
you were
truth?
going to say financials, but they are important. How about this? They're confirming.
Right now, nobody gives a shit. It's great that they're up. We're happy. We celebrate financials every day. The only sector that matters right now, 38% of the market is technology.
Can I take you back to one St. Patrick's Day, 2008, you and me drinking coffee on the corner of Vanderbilt and 46th Street, watching giant Irish dudes in playing the bagpipes, people walking out of Bear Stearns holding boxes,
Yeah.
CNBC, Fox trucks with satellite dishes everywhere,
Yeah.
drunk people everywhere, because
I
it's
remember.
across the street from Grand Central, and they were coming in to booze.
Dude, they had Erin Burnett set up with a folding table like it was a block party, and she did the show directly from in front of Bear Stearns.
Oh, rest in
building.
peace, Naples 45.
Yeah. Oh, those are the days.
Oh, remember the free pizza there?
Those
yeah.
are the days.
Dude, free pizza every day. How many times were me and Josh there?
We could do Vanderbilt reminiscences.
All right, let's keep going.
I mean, they were like
reminiscences all day.
$12 beers, so
All
we
right,
were
so
paying
financials,
for it
so
indirectly.
financials.
But
Why do you think that
We
this is
don't-
the same importance?
first
as
of
it
all,
was
we
then?
do not have bull markets without financials, and we're thinking as just ignorant Americans. Around the world, they don't have huge tech companies. They got big banks that handle all the business, right? So in other countries, the banks are even more important than the United States, and I would argue that in the United States, financials are the most important sector. Now, playing devil's advocate, technology is the biggest sector. And when you look at every
Well,
bull,
define important.
hold on, right? That's my point. So when you think back over the last 100 years, you study every bull market, you'll notice that technology is a leader in pretty much all of them, right? So you can argue then technology is the most important sector. Well, it don't matter because they're both making new all-time
You need
highs.
confirmation, or you want it.
I think it's great that financials. I think first of all, you can't have a bull market without financials participating because somebody has to finance it all, and all the trading is happening within the financial company. So of course, it's almost a tautology. When somebody says what's the most important, I read that as what's the most relevant, and of course, it's technology. It's all of the earnings growth. The sector is bigger than all the other sectors combined.
Yeah,
almost.
this is a dumb question. It's obviously technology.
Like
But let's keep going.
I don't think it's obvious. I'm with you.
You guys are fist
I was
bumping.
answering how you knew. I knew you
You're
wanted.
trolling
I
me.
knew you wanted to be financial.
I think
I'm
it's
not
financials,
trolling.
but it doesn't matter
Yeah.
because they're both making new highs.
All
All right, next. Right?
Well, industrials are the most economically sensitive sector.
Technology
As
became.
long as you guys could both admit that you're wrong and I'm right. we can move on.
I would admit.
Listen,
Let's
who
go.
writes the blog? Everybody's wrong. All right, I'm going to make that decision
fine.
around here. Communications.
Also very important.
Technology
It's
became
still tech.
such a big sector
They had to break
that
it
these
up.
guys had to take stocks out of the sector and invent new ones to put them
Why
in.
did they do that?
Because it was too big. They had
It was
to.
too big.
Oh, okay.
You can't
I
have.
got it, I got it,
Imagine
I
if you had Meta and
Yeah,
Alphabet
yeah. It'd
in
be-
the same sector as Microsoft, Apple, Nvidia.
Right.
It'd be 80% of the
gotcha.
stock market at this point.
That's called mooning.
Yeah.
So communications all-time highs. A lot of Netflix, a lot of Facebook, a lot of
Google.
Google, right? And then the next one, you know, the truth is when you go back and you do the math, which some of us like to do, and you take all the sectors and find the one with the highest correlation with the S&P 500, it ain't tech, it ain't financials, it's actually industrials.
I believe that. Because
All
if
right.
you go back far enough, these were the tech stocks of the first 50 years of the 20th century.
Well, you know what else? Well, the S&P 500 didn't come to the back half of the 50 years, but you're not wrong. You're right. But that continued. But it's bigger than that, I think. It's that it's very diversified.
Yeah.
Think about what's in the industrials.
Railroads, defense.
Waste management.
Yeah. Right.
I mean, we
JC,
can go
let me
on
ask you
and
a
on.
question. Why do you think a lot of people?
Construction.
Why do you think a lot of people?
Machinery,
All right, shut
engineering.
up. Let me ask you a question. Why do you think a lot of
It's a big
people
sector.
get nervous when you have everything working? When you have industrials, financials, technology, the overall
'Cause
index.
It feels too good.
Why? So why is it that we think that what's about to go wrong?
You know, it's a very Catholic. It's like a very Catholic mentality that like we're getting too much heaven. Surely, like it's almost like too much.
How
sin.
much Catholic school did you go to?
Oh,
Josh?
my mother's Catholic. I could talk very
Yeah?
deep. But my mother's Irish Catholic. It's a different kind of Catholic than you know. But like I'm telling you right now, there is this idea that people have where it's black, it's got to go red. It's heads, it's got to go tails.
But do you
You
have
think
that
that's a
mentality?
Catholic thing?
I think there's a Catholic thing about sin and pleasure.
Oh, well, I'm
and
very
things-
Jewish, and I'm
and-
asking a Cuban. Do you?
and-
Why do you think? Why do you think
no,
this
no. The
happens?
difference. So I'm half and half. The Jews think nothing should ever go right. The Catholics at least allow for the possibility
Yeah,
that
but
things
we're-
could go
we're
well,
special.
but not too well.
Yeah, but you know
Not
what?
too
It's
well.
different because I was trained by the Jesuits, and the Jesuits get down. The Jesuits party, so it's a different type of Catholic. You know, it's a different Catholic education.
But I'm saying there is like in the back of people's minds the way we're wired. It's
I think
like,
it's
oh no, this
humans.
is too good.
No,
So-
I think it's
too
humans.
good.
It's not Jews. It's not Catholics or Jesuits. It doesn't matter. It's the humans. What the beauty of it, and part of the reason why we call the newsletter "Everybody's Wrong" is because we know for a fact that asset prices trend. We know. We have the data. We have the math. Everybody has it. We know it's a fact. It is a pillar of the market. There's a lot of things about the market that we don't know, mostly about the future, but we do know that asset prices trend.
Yeah, I would agree with
okay?
that.
Here's the other thing that we know. We know that volatility mean reverts.
Yes, does
From
not
high
trend.
volatility comes down, from low volatility goes up. That we also know. But here is how the humans act. The humans are always trying to mean revert on the asset prices, and they're trying to trend follow on the volatility. When volatility's high, they think it's going to be high forever. When volatility's low, they think it's
Love
going to be
that.
low forever. Stock market makes new highs, they want to sell it. Stock market makes new lows, how much lower can it go? A hell of a lot
That's a
lower.
great point. Clip that for TikTok. I couldn't agree more. I feel like people's feelings when they're making a ton of money, some people, there's almost like a guilt and a shame, like this is too good, it's got to go bad. And people feel not just about the stock market, anything that's too good, it's almost like, oh man, I'm going to have to pay for this, like somehow. And that's why people forget that asset markets trend and bull markets go on way longer than you think possible because they think they don't deserve it. And that's there's a very Catholic thing to that kind of feeling. And I know it because I see it in my real life with real people.
Next chart.
In things that have nothing to do with the stock market. So that's my comment.
All right,
there.
what do we got
You
here?
know, I'll finish with this. Catholic, Jewish, it doesn't matter. At the end of the day, it's humans. And what we know for a fact as well is that humans are going to make poor choices and act irrationally when their stress levels are elevated.
At all times. Yeah.
Particularly when stress levels are elevated in this day and age, that happens when there's money involved and politics.
But JC,
and when you combine both, especially in this,
Yeah,
there's
it's
a lot.
toxic.
But there's a lot of opportunity there.
But people think it's irrational to buy new highs. It's the opposite.
I don't know what's irrational about the fact that we know that asset prices trend and we know that buying new highs is historically a great strategy.
Once again, this is the gambler's fallacy. People think what goes up must come down.
Right.
And in a lot of things in this world, that is how it works. Just not in this thing.
Yeah.
Good.
Yeah.
So these are the returns since the election going into the end of the first half. So these are just the first half returns plus the back end of the year
What
after
is
the election.
AFK?
What?
What's AFK?
Africa.
Oh, okay.
They're buying African stocks. Is that evidence of risk aversion?
That's not a bear market.
No.
I've never seen that ticker before.
Well, step your
That's
game
the ETF for Africa?
up. Yeah.
Probably very heavy Nigeria and South Africa, I'm guessing.
Yeah, that's right.
In that.
Yeah,
Okay.
a little Egypt in there. Yeah,
A
for
little
sure.
Egypt.
Very
Yeah.
worldly
Yeah.
observation.
Oddly enough, they delisted the Egypt ETF to my unsatisfactory.
We talk about this every time you're here. Let's go. Next
Get
chart.
over Egypt.
So needless to say, tremendous return since the election. This is the Trump squeeze 2.0. When 2016, I lived in California. People were jumping out of buildings when he became the president of the United States. Everyone's selling their stocks around me. I'm like, you guys are crazy. 2017 was one of the greatest years in the history of the market, one of the least volatile years in the history of the market. We've seen this story before. It's deja vu all over again, right? So I think the Trump squeeze still has legs, right? I still think
But the stock market ripped higher when Trump won this time. I know it happened in 2016 also. I think people knew Trump was going to win for a month before this election, and they were buying stocks. They were buying crypto. I think people learned their lesson from that.
Here's
that
the difference.
2017.
Here's the difference. The troughs in sentiment, where sentiment was extreme, was near the election in 2016. It didn't come to the spring this year. So the extremes in pessimism were a little bit delayed this go around, but very similar.
Well, he didn't start talking about tariffs till late February.
Maybe.
This time around. So I think that was the thing that freaked people out. This is remarkable. What's not working this year on the equity side around the world?
Short sellers are getting fucking crushed.
Well, obviously, but like any regions not keeping up or
Healthcare. I know it's
I
not
don't
a
know.
region,
Is
but
Latin America on here?
New Zealand is underperforming. You know, that's one thing that stands out to me.
Something to keep an eye on.
Okay, let's go through this. Ready? All right. I wanted to talk about cryptocurrencies because how can we not? You're looking at the total crypto market cap around the world at the highest levels ever. So crypto has never, ever, ever in history been worth more than it is right here, right now.
The number is 3.8
Yeah.
trill.
it's a lot of money.
It's not. It's an NVIDIA. It's a rounding error is really what it is. Every single cryptocurrency in the world can go to zero tomorrow, and it will not matter to anyone who matters.
Yeah, I guess that's right. Nobody systemically important has like a lot of leverage on crypto to the point where they would like be threatened.
It's completely irrelevant.
Very different than like real estate. I would agree with that.
It is an irrelevant asset, a rounding error at best. Part of the reason why I own so much.
In the aggregate.
In the
not
aggregate.
to individual.
Yeah, no, to an individual, they might have a big percentage. But when you talk about a quadrillion-dollar Forex market and hundreds of billions of dollars in bonds and 60 trillion in stocks, 4 trillion is nothing.
Well, the other thing is
one stock.
on the way out, the 4 trillion doesn't vanish into thin air. It becomes dollars or something else. So it's ripples in a pond.
It doesn't matter. But I think that's part of the bull case. To be
But
honest,
you're not
I don't
saying,
say
you're
it
not
as a
saying
bad
that
thing.
pejoratively. Like that makes you more bullish.
I mean, it doesn't make me bearish
Right,
that it's so
right,
irrelevant.
right.
You know, like how much smaller could it get? You
I think
know?
that's really helpful for people to hear because if you don't think that way, you might be tempted to think like this is as big as it could possibly
Hang
get.
on, guys. Hang on. Counterpoint. NVIDIA is fucking huge. 4 trillion is not nothing. NVIDIA is bigger than Apple and Tesla combined. I saw that today. That's not nothing.
He's comparing it to the Forex market. though.
Why? Why would you do that?
Well,
Like,
cryptocurrency.
yeah,
talking about assets.
Compared to the
Cryptocurrencies.
treasury market, it's tiny, but it's fucking $4 trillion.
Which is nothing.
Cryptocurrency.
Dude, how big should it be?
10.
Okay. I hope it does. I'm bullish.
Yeah, 10. 10 trillion.
We don't have that one.
Josh
today.
had 0% chance. No,
We
it
don't
can
have
hit,
that
it can hit 10. Why not?
Yeah, 10. Okay, so right now it's at 3.4. What's 10? So here's the big chart.
Oh, your laptop's off.
Here's the big chart. This is Bitcoin dominance crashing.
That's bullish for crypto.
I think it's
There's a
bullish
0%
for
chance.
I think it's bullish for stocks. I think it's bullish for crypto. I think it's bullish for
Because
Bitcoin.
it's risk on.
I think.
Of course it is.
I think altcoin season,
Yeah.
like hot girl summer, like altcoin summer,
Can I
right?
ask you a
Like,
question? Is stable coins included in
No.
this?
No.
Okay, Solana is.
Yes.
Yeah.
ETH is.
Yep.
Yep.
So a lot of people are talking about the performance in those two.
No,
particular.
not Solana. ETH BTC just
Yes.
broke a sick down
Next
trend.
chart.
It's going
Next
nuts.
chart.
No, ETH BTC is.
No, he's absolutely right.
thank you.
This
Thank
is
you.
it.
There it is. Thank you. You taught me well.
This is the one. While everybody's freaking out and they're crying about the, epic reversal day. Now, every son is a key reversal day expert in the Bitcoin markets. You get a reversal on Monday, a little follow through on Tuesday. But all along that time, Ethereum is just grinding higher. And, this is something new. When we see something that we haven't seen in a long time, that stands out.
Yeah, if you zoom
And
out, massive downtrend.
when was the last time
Yeah.
that you saw Ethereum? Alfred, so let's
It's
do
been a
some
minute.
math. Bitcoin is 2.3 trillion. Cryptos, let's call it 3.8, right? So Bitcoin is a little over 60% of the entire crypto markets. Ethereum is about 420 billion, 420 for those who partake. Then you got Binance at like 100, Solana at like 90.
Binance is the BNB token.
Yep.
Yeah.
And then Ripple like 200. Throw up the Ripple. Look at this chart, by the way. Come on, JB.
Yeah, not for me.
Really?
Not for me.
You think this is a scam? You
No.
think one of those?
No, I just don't think anyone needs it.
Oh, because now we're buying things people need?
Well, no, from what I like to understand like what it would be used for.
I don't know what Ripple is.
I'm an
I know you
idiot.
don't
I'm an
care, but-
idiot like
yeah.
that. I like to have an understanding of like why it would have value before I buy something.
I don't know
You're
anything
crazy,
about
man.
this, but what I do know is that there aren't any cryptos
I don't know
that
anything
look like
about
this.
it either. I read 5 things, but like that's my bias. Like, oh, this is like it's okay to have, but nobody really needs it.
Well, hold on,
I don't care.
but you're like a chip maker expert now too? Like you don't
No.
know anything about chips?
I don't know anything about anything.
Right?
dude.
That's my point. So what's the
Pringles. He's a
difference?
big Pringle guy.
I'm with you, bro. I don't know anything about chips or oil and gas drilling or
well, I understand. If it moves, trade it. Got it.
what do I know about? I know about charts, I know about wine and baseball.
And food.
Yeah, I'm pretty good at food. After that, I got nothing.
Yeah. Next.
Nothing, right? All right. And then the smartest money in the world, commercial hedgers, are the most net long Bitcoin ever.
What does this mean? What's a commercial Bitcoin hedger?
These are the people in the
Miner.
business. So you're looking at the
Miners?
miners,
Okay.
you're looking at people who are companies that are
Ah,
transacting
gotcha,
in
okay.
Bitcoin that actually have to hedge their positions. These are the corn farmers that are hedging their corn crops, right? The speculators are the dumb money. These are the asset managers, the hedge fund managers. These are the people we want to take the opposite of. So the small speculators, the large speculators, the money that makes the worst decisions, particularly in extreme, is shorting Bitcoin at the highest rate ever.
Why are they doing that?
I have no idea. I asked myself the same
I
question.
just told you why. The gambler's fallacy. What goes up must come down. That's the answer. There's no other. They don't know anything.
Could they be short? I mean, just as hedging to offset other long positions?
No, the
in there?
hedgers are the ones that do the hedging,
Uh,
and they are long.
Okay.
Not only are they
Got it,
not
got it, got it.
hedging, they're the ones buying. So,
All
are
right.
you going to bet with the dumb money? Or you're going to bet with the smart money?
I'm with you, bro. Let's go.
All right. And then this is a trade that you hear a lot of people talking about, that they want to short MicroStrategy and then buy Bitcoin, taking advantage of that arbitrage, right? Because
Jim Chanos. This is his trade that he has on right now.
all right, good luck. So if you are betting that arbitrage is going to close out, then you are betting that the orange line is not going to do what the black line is doing.
It is.
I think it is too. But
Wait,
if you are
sorry, say that one more time.
so if you are shorting so let's, for the audience that doesn't understand, go to the next slide real quick and then we'll come back to this. So this is the strategy. It's such a strategy, they actually changed the name from MicroStrategy to just strategy. And they own $71 billion worth of Bitcoin.
And they're being valued at 140 billion.
127.
So you're getting one Bitcoin for $2 worth of Bitcoin.
You're basically paying
Right now, if you buy the
you're
stock.
paying close to a 2x multiple for the stock compared to their net asset value, if such arbitrary things mean something to you.
Well, the theory being he's going to do something with the Bitcoin or with the leverage, or he's going to be able to accumulate Bitcoin faster than
Then he
somebody
could dilute
else.
his shareholders. That's it.
Then
And
he
it's
could
working.
dilute his
It's
shareholders,
working.
and it's working
It's
so
working.
far.
Well, I'll tell you what. Logically, it makes sense. Like, there's no reason for it to trade at 2x.
Dude,
for
he called
absolutely
the
no reason.
shot and he's doing it.
No, fine. But I get the logic. But if you go to the charts themselves, if you're betting, if you're shorting.
His answer is that the world is going to run out of Bitcoin, so it makes sense to leverage up and buy it at a faster rate than anyone else.
Yeah, fine. But
And people who believe in that buy the stock.
Right. But my point is, if you are shorting the stock and buying Bitcoin to take advantage of the
My
arbitrage,
point is, dude.
you're betting that orange line is not going to follow the black line.
Well, right, because think about it. Like if Saylor is wrong and demand for Bitcoin goes away, you'll lose money on both.
Yeah.
So I'm not even sure there's a spread to be captured there in that scenario.
Gentlemen,
so what are you rooting for then?
We're at minute 55 and we've got into like 6 charts.
All right.
let's go.
I want to rip through a few charts here and then we could talk about it. All right, we're going to do this again. We haven't done this in 18 months. We did it in 18 months. How's the stock market done since then?
Quite well.
Not bad, not bad.
Strong to quite strong.
So as hardcore Americans, like, you know, I don't know the AFK ETF because I live in Long Island, right?
Well, how much should I have allocated to the AFK ETF?
God. Here.
Well, clearly you were underexposed to the
0%
Africa mean reversion here.
0%
At the end of the day, there's a big world out there outside of Long Island, right? So let's go through it. Ready? Are you ready, John?
Well, I'm ready.
All right, let's go. Ready? This is the Global 100 ETF, all-time highs. German DAX, all-time highs. German DAX, I would say after the United States, I would put it Germany number 2. All-time highs in Germany. Let's go. Let's roll. Euro Stoxx 600. This is the S&P 1500 of Europe.
Yeah.
This includes the small caps, mid caps, large caps, all-time highs. And then we can just keep rolling. Euro Stoxx 50. This is the Dow of Europe. This is the top 50 pushing up against new all-time highs. This is European banks pushing up against new all-time
That was
highs.
so good.
I mean, you know, France, not the best, but not bad. The CAC pushing up against new all-time highs. And then things get better from there. JB bringing out London as the first chart. Didn't see it coming. Didn't see it coming. Love you. London, FTSE 100, all-time highs. 350, this is the broader look at the UK. This is the 350 over in London, also making new all-time highs. And then just keep going. Oslo, new all-time highs. Stockholm 30 index, like France, not the best, but still above the prior cycle highs, looks great. And then we could just roll through all of these. Poland continues to make new all-time highs. Amsterdam, new all-time highs over in the Netherlands. Italy, 17-year highs.
Almost there, look.
The Milano Indice di Borsa.
I can't believe it.
Portugal, highest level since 2011. We can keep going. Brussels, new all-time highs in the Bell 20. Ireland, shout out Ireland. New all-time highs for the Ireland Stock Exchange.
Look at that.
Austria, 17-year highs over in the Vienna Index. Shout out to Prague, new all-time highs in Prague, finally getting above those great financial crisis highs. Spain, the highest level since the great financial crisis.
This one will double top. I can see it.
You know, shout out to Spain.
All right.
And then Greece, new decade-plus highs. And then we could just continue to keep going. Tel Aviv, shout out Israel. Not only outperformed America last year, outperformed America once again this year.
Yeah.
You hear nothing but terrible things about Israel. Stock market, all it does is make new all-time highs. Johannesburg, shout out Africa. Again, so many Africa shout outs today. New all-time highs for the Johannesburg Stock Exchange. India, pushing up against new all-time highs. This is the Nifty 50. Then if you look at the Bank Nifty, these are Indian banks. So you got the European banks, you got the financials in America. And you got India doing the exact same thing. China hitting new multi-year highs. The short interest in China off the charts. It keeps ripping and they keep shorting more. And I love to see it. Japan, finally. Exceeding those 1989 highs.
So much memory.
This is crazy.
So much memory.
This is crazy. Like this is the most epic of all the country charts, I think.
Really?
Yeah, it's because it's a bear market. It's a bear market like breakout, like 38 years in the making. It's extraordinary.
I love Japan so much.
Yeah.
It makes me so happy. Shout out to Japan.
So those buyers from 1989, they're almost break even here.
They're break even
They're
now
break
for
even
sure.
now.
And then so when you look at it in various currencies, this is Japan priced in yen, making all-time highs. But if you price Japan in the dollar, which is the next chart, what are you going to see? You're going to see all-time highs as well. So it's not the yen, it's not the dollar, it's Japanese stocks.
The stocks.
It's the stocks, right? So we'll finish up here. Singapore, new all-time highs. Australia, new all-time highs. Brazil, and we'll finish up in Latin America. Brazil, Bovespa, new all-time highs. This is all priced in local currency. Chile, new all-time highs. Mexico, new all-time highs.
Amazing.
And of course, Peru, the Bolsa de Valores de
All right,
Lima,
so in conclusion,
new all-time highs.
So sell.
Listen, we did the same thing a year and a half ago. Which way's the trend?
I need Venus, Neptune, and Jupiter to confirm what we're seeing here on Earth.
Listen, if they had a stock exchange, it would be on this
It would
list.
probably be.
promise you.
All right, round of applause for JC. And really for investors around the world, what could derail this? Maybe like a 10% rip in the dollar. would definitely derail this.
Can you throw up the dollar chart? As a matter of fact, yes. Yes,
Like-
that is exactly
Like
right.
if you're like, all right, this all looks amazing, but what happens if this is the if? Yeah.
Yep,
Okay. What if this is a false breakdown?
yep.
Okay.
Yep.
So-
and then, we were talking about at the beginning of the year how the big, heads up as the dollar could be about to collapse. Boy, did it. Part of the reason why I thought that was going to happen was where sentiment was. Commercial hedgers were super short the dollar, the dumb money, the speculators, the ones that are short Bitcoin here, they were long the dollar coming into the year. They got smoked.
Yeah.
Right. And now it's the opposite. The hedges are actually net long the dollar right now. And then the Economist magazine in the fourth quarter last year, remember the wad of Benjamins shooting up in the air like a rocket ship? Remember
Yeah.
that?
Now it's like George Washington on a stretcher. Like that's like the news.
Oh, no, it's like a ghost face, and it says the dollar crisis unfolding, actually.
Right.
JC, in
Perfect,
so
right?
if you were to have some charts, I would invert it. Like Grant Hawkridge does a lot of the stuff, the risk on risk off ratio. In sectors that trend, if you had to guess, there's one sector today that was red, the market just closed. There's one sector that was red today. It just made a new cycle low relative to the S&P 500, what's the sector?
Stables.
Close.
Healthcare.
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 Yeah.
Down a $1.10 today, percentage-wise. Every other sector is green.
Yeah.
So that's a great segue. Let me show you another awful chart I made. I want to pitch you what I think is the biggest contrarian call right now. I'm not saying it's going to work. I'm just saying if I were a dyed-in-the-wool contrarian, this is the only thing I'd be buying. And maybe it will work. Here's the IBB, which is the large cap biotech index. It's a little bit concentrated into the top 10 names versus the S&P 500 10 years. So over the last 10 years, you did 249.1% total return in the S&P. You did 1.7%, not annually, period. 1.7% in biotech. This is literally the worst place you could have been as I guess part of healthcare, but like as a big industry group. This is as bad as it gets. But it looks like this downtrend maybe. This is XBI. So let's put up so XBI is equal weight. So there's more tickers in this one. It's a little bit got a little bit of a small cap bent. I don't know. I'm not saying it's an uptrend. I'm just saying, is it breaking the downtrend of the last year? Sort of a little bit.
I got to tell you, this is one of those scenarios where I think everybody's wrong. The short interest right now in the XBI is as high as it's been in years.
Yeah.
I mean, you want to talk about short sellers overstaying their welcome. Not only are they incredibly short the biotechs, they're new 52-week highs in short interest in the Russell 2000 now. So when you think about what's in the Russell 2000, what's in it? You got a ton of biotechs, 250 biotechs.
I was going to ask you, like, when rates come down, do people think biotech is not going to rally? Because I know it will. It always does. People buy small cap piece of shit biotech stocks when interest rates are coming down, period. I don't have a reason for why it makes sense for them to do that. I'm just saying they do it.
But interest rates have been going up or sideways, not going down.
All right. This is Ari Wald.
But then hold on. Oh, the other thing I was going to tell you is that it's top down. Short interest in the smalls, and then what's in the smalls? Regional banks and biotechs.
Yeah.
Short interest is off the charts in both.
Yeah.
So it's a short interest, the Russell 2000, the bios, and then to quote macro charts, give macro charts a follow, great follow. And he says that never in history have we had a major top in the market with this much short interest in the Russell 2000.
Ooh.
Okay.
You're seeing it in the ETF and the futures market.
So that's got to get unwound first, in other words.
I mean, nothing has to happen, but like you could place your bets.
Historically.
So I'm with you.
All right, let me show you. This is Ari, friend of ours, Ari Wald from Oppenheimer. He's basically saying this is the final piece to unlock the broader breadth that people want to see. And he's saying XBI above $89 would support broader 200-day participation. Like, this is the last big piece of the market that just has had no benefit whatsoever. And then let me show you a second chart real quick. Revisiting biotech's lost decade. It's crazy, but like to have zero progress for this whole area of the market for such a long period of time, and he's showing the 10-year U.S. Treasury yield versus up against the S&P biotech versus the S&P 500.
Yeah.
That's a pretty neat correlation there.
It's what you were just saying, right?
Yeah, it's pretty incredible. These stocks are just dead.
Huh, that is good stuff.
That's good.
Yeah.
But to your point, everybody already agrees that they're dead and they suck and they think they're going lower.
I agree.
And this, particularly the biotechs, is part of the ARK short, the Kathy Wood short. I mean, I don't know if you know this, but
She's
the ARK,
ripping.
highest short interest ever in ARK.
On ARK. Let me show you two charts that
And
don't look like shit.
biotech is ARKy, you know?
Which of these, if either, would you buy? Here's Amdalam Pharmaceuticals is the 5th largest holding in IBB. Believe it or not, ALNY, not a name a lot of people know. This is on my best stocks in the market list. This looks pretty good to me.
Looks very good.
Okay. Gilead. Everyone knows this
Oh
name.
my God, I haven't heard of that.
This stock has done
Wow.
nothing for 15 years, and then all of a sudden, near the 52-week high list, multi-year high, I should say. These are the only two of the top 10 IBB names that looks like it has any semblance of life to them.
Remember Regeneron?
What's up with these
Stock
Regeneron looks
sucks.
worse than ever.
Holy
What's up with these
shit.
arithmetic scale charts?
I don't know.
Yeah,
It's how I roll. It's how I roll. I don't have that much time. Anyway, I thought it was interesting that you would think in a bull market there'd be some big biotechs doing really well. Maybe there were some small ones that are bucking the trend, but overall, nobody cares.
Well, I think you're right in what you just said is that, you know, the overall biotech, you know, the problem with biotechs is that they're all so little and, you know, they're all, you know, there's very few big biotech stocks. They always get bought out by the big ones, right? If you sort by like biotechs between 10 and 30 billion in market cap, there's like 5 of them, right? There's like none. So they're all super
but
little.
you have like the Amgens of the world. They're just not working.
Well, I think that it's on a case-by-case basis in that group. It's hard to buy a basket, particularly the XBI, because there's so many different things going on. But I think it comes back to what Ari was saying. I want to give a shout out to Ari Wald. I don't read anybody's work. Like I don't have time to worry about what other people think. Ari's one of the people that I read.
Yeah.
Very few.
Yeah, we never
so
miss
shout out to Ari. And I think that when he's talking about the market breadth, think about just how many biotechs there are. There's a zillion of them.
Yeah.
There's like 250 in the Russell 2000. There's so many. So when you talk about market breadth, like this is a big group because there's so many of them. By the way, regional banks also.
Dude,
Same
if
thing.
you did a biotech chart of the week, it would be hot.
biotech chart of the week.
People really love that shit.
All right.
They really do.
Done.
Try to find one that's going up. Let's skip ahead. We're going to do Fave Mag 7 for the second half. The reason why this is relevant is these are the stocks that everyone owns. Or if they don't own them, they're following them and they might want to buy one. So these are like the mega cap tech names. I don't think they'll outperform per se. I got tons of stocks that I own that are doing way better than my Mag 7 stocks. But I'd just be curious to hear what you think is the best technical setup amongst those 7 names for, let's say, now into year end. What are you looking at?
And then so what are the 7?
Right.
Microsoft.
Tesla, Microsoft, Apple,
Google, Amazon.
Google, Alphabet, Amazon, NVIDIA.
Not Broadcom?
Not in it. Taiwanese.
Taiwan Semi?
No. Broadcom.
Taiwanese?
Sort of. Not really.
Is it?
No, it's not. It's not in it. It might as well be
I
at
thought
this
it was
point.
from America.
No. It might as well be at this point.
Really? Okay.
Yeah.
Do you want me to go what you think?
Well, go ahead.
All right.
Wait, you know which one, JC? Well,
No, I'm going to give my answer. JC could think.
Okay.
Oh,
his
okay,
answer.
okay.
All right. So this is a bit contrarian, and I've been talking a lot of smack about the company, not the stock, although the stock too. I think Apple, if it breaks here, this is Apple relative to SPY. That is multi-year support. If it breaks this, which it very well might, not game over, obviously it's 3.5 trillion or 3 trillion, whatever it is. But I don't think it's going to
Very
break.
confident in my assertion.
Oh shit, my bad. I don't think it's going to break. I think it's going to hold, and Apple is going to catch up. There is so much negativity in the stock. Any sort
Did
of
you
AI.
say the same thing about Alphabet right now?
No.
Negativity?
No. Google's working. It just closed at a multi-month high.
Yeah.
There's so much negativity around Apple. If they do anything in AI, the stock's going to rip. And that's my answer.
And then why do we have to buy the American ones? Why can't we buy the Apple
Just
of China?
answer the question.
Hold on, with the Apple of China, the Tesla of China,
We
the
can.
Amazon of China.
We can, but not for these purposes. Not for the purpose of this exercise.
Got it. So we have to
These
stick
are
with
the stocks that our
That's
listeners
Xiaomi.
these are the stocks that our listeners are involved with.
Got
They're
it.
either in them or they're out of them, might get back in them.
Dude,
So the one that I would buy right now that I think goes the highest over what period?
Rest of the year.
I don't know, year end, arbitrarily, second half of the year.
Probably Tesla.
Tesla
Ooh.
is down the most of the group, negative 20% on the year. Definitely the most controversial. Probably the one that's, other than NVIDIA, the most exciting when it's going up. Okay. Do you like the setup here?
Yeah, I mean, listen, we've been in it. As soon as that guy from Minnesota, what's his face, was like dancing on stage, like talking about like, what's the guy?
Waltz?
Tim Waltz. He was like, this is the guy, he walks around talking about how broke he is and how he doesn't own any stocks. And then he's on stage at a rally talking about like how it helps him get through his day to watch like Tesla stock fall. Like, if you're not buying.
Did he say that?
Yeah.
Pre or post election?
Dude, Tesla's up like 50% since then. No, it was like a few months ago.
Oh boy.
Oh yeah, huge winner. Oh yeah. Best trade of the year. And I think that I'm not just making fun of him, but that was like, the same week I got a phone call from a friend of mine telling me that they were getting off Twitter because they didn't like the CEO. I was like, whoa, we got to be close.
Well,
right?
there are people, probably 1 million people who wake up in the morning and pray for Tesla's stock to fall.
Sounds like a fun life.
Yeah.
So if that's the case, how are we not buying Tesla?
Let me show you. Let me show you Amazon. Golden Cross, 240 resistance. Heading back to this level after about 6 months of consolidation. Here's Jeff DeGraff's version, better than mine.
Shout out Jeff DeGraff, by the way.
Jeff says this is the most notable of the mega cap stocks, and he's also pointing out the Golden Cross, but he's also pointing out relative performance to the whole Russell 1000.
That looks like it's going to break out.
What if I told you this?
And nowhere near really being overbought in such a way that you'd be worried about it, even though it's been ripping the last couple of weeks. I think this is the one.
I want to give
to Jeff DeGraff.
Big shout out to Jeff DeGraff. Jeff DeGraff.
Wait, JC, can I do one more chart on this?
Yeah.
These are fundamentals. You won't care about this. Michael might. This is Amazon price, lowest PE ratio ever, 36. Not that that's cheap, but cheap for Amazon. And you could say the growth rate is low. Okay, fine. I'll give you that. It's not as high as it used to be. Look at earnings per share, hockey sticking. This is just trailing 12 months. Nothing fancy. So basically, you've got earnings starting to explode because of all the cost cutting. You've got the lowest PE multiple ever you've been able to buy Amazon at. And you've got a stock in a Golden Cross about to challenge all-time highs set 6 months ago. I sort of like that setup for the end of the year.
I just read Barry's book and he says that valuations don't matter.
Oh,
So-
well, in that case, forget that
That's
last
a bit,
chart.
but hold on. But I did want to get back to the Jeff DeGraff chart.
All right, put that back up.
So many Barry shout outs, by the way.
Yeah.
So what if I told you
He doesn't listen to the show that often.
Perfect.
So we'll have
Fantastic.
we'll send it to him.
that book? Not very. What if I told you that one of the biggest reasons why I like Tesla to continue higher is because I'm bullish Amazon, right?
Go on.
Oh,
Because-
say more.
Because Amazon represents 22% of the consumer discretionary sector, which, by the way, in the conversation of the most important sectors, we didn't discuss, but is in the conversation, obviously. So consumer discretionary, 22% Amazon. Should probably be more. Amazon's at my fucking house every day. And when it's not, like the guy knocks on the door, like everything okay? Right?
Yeah.
I mean,
you didn't order anything. Just this is a wellness check.
dude, my wife orders things on Amazon on the way to ordering things on Amazon. So
My wife orders things, and as she presses buy, she's telling me she has to return it.
mine doesn't return anything.
Okay. All right.
Maybe they should share notes.
Yeah.
So Tesla's like 18% of the consumer discretionary sector. So if this bull market's got legs, which I don't know if I didn't make that clear, I think it does, right? Then are we going to have another major leg to this bull market and these shorts their heads are going to be exploding even more over the next 6 months? Is that going to happen with consumer discretionary stocks falling? Probably not, right?
Yeah.
So if you reverse engineer what the next leg of a bull market looks like, Amazon is certainly part of that as a consumer discretionary stock, the leader in the space. Is that going to move with Tesla falling? I don't think so.
I mean, it could. I mean, envision a scenario.
It could,
where
but is that
does.
the bet that you want to make? I probably do not. So
Yeah.
when I see sentiment and the Minnesota guy dancing on stage, and I see everybody hating Elon for better or worse, I've never met the guy. I don't know anything about him, but people are very upset with whatever it is that he's doing or not doing. I don't even know, but I like it.
Mm.
The angrier, the better, right?
Okay.
And I think that not only. Correct me if I'm wrong, not only is he pissing off the liberals, he's pissing off the Republicans too, so that's even better, right? We're getting both sides. So
Yeah.
I think that creates a further squeeze. And by the way, with ARK as having the largest short exposure ever, the highest short interest ever in ARK, Tesla is in that. It's not. It doesn't have super high short exposure, but Tesla is an ARK stock.
ARK
that
it's going vertical.
A poster child. So you got Palantir.
It's part of that.
You got all
It's
these
part of
others.
that universe.
You know, so John, can you show getthecharts.com? I know there's people that always ask for the charts. If you want the charts today, Spencer Israel set it up. Thank you, Spencer.
Shout to Spencer.
Shout out to Pete Campbell. Getthecharts.com. I know a lot of people always ask. Go ahead and get the charts.
All right, hit my applause. All right, JC Parets, ladies and gentlemen. So we always end the show these days by asking people what they're most excited about in the future, what they're looking forward to. Could be anything, personal, something you're doing with business, trip you have planned. You tell us. What are you looking forward to?
Just bought a house up in the Poconos on a lake.
Okay. Oh, not Jersey Shore.
Not Jersey Shore.
Okay. Why?
Because I could use it the rest of the year.
Okay.
You know, so, you know, we might get a shore house eventually, but like to use it for 3 months, like I think it's probably a better life
You
investment.
can do Airbnb.
I mean, we rented a house for 6 weeks
Right.
earlier this summer. I mean, this
Easy.
tan, I don't have
Easy.
this tan all year round, you know? So like we could do that. But to have a
Oh,
house, we can
Poconos,
use
you could always go.
the fall. I'm an hour away. So the fall, the winter, the spring, you know,
That's nice.
even the summer is nice, even though I'd rather be at the beach in the summer.
All right, we love it. What are you looking forward to?
I am looking forward to
Hikes with Phil Perlman.
I'm looking forward to tonight. I love being with my friends, and I love you, JC, and I love you, Phil, even more than I like
Wait,
JC.
where are you guys going?
Phil's definitely more lovable than me.
So this is not going to air till tomorrow. Where are you going?
We are going. Where are we going? Dams. Where
Yeah, we're not doxing ourselves.
No, you're not doxing
We're
yourself.
not doxing ourselves. Math nerds all over the place will come looking for Michael Batnick.
There'll
I
be
know how it
dozens of them.
goes. We're going to Dom's Bogan.
Oh,
So this is
it's a
Korean
Yeah.
barbecue joint. Shout out to Sam Rowe, who's got me hooked on this
Yeah,
place.
friend of
Love
the
it.
show.
Shout out to Sam Rowe.
All right. I'm sorry I can't join you guys.
So this is what life is all about, right? Being with friends. So that's what I'm looking forward to.
I agree. All right, we have a cake on the table for the 200th episode. Want to take pictures? Okay. All right. We have a lot of special guests in the studio today.
What's
Appreciate
the
that.
significance of the rocks? What is that?
They're compound pieces.
Well, Josh is like you're a theme guy, so
I had nothing to do with the
Okay.
cake. The cake's
All right.
beautiful, though. You
I
know what
love
it
it.
looks like? Doesn't it look like those paper plates?
Yes.
It does, right?
Arizona.
Yeah.
Yeah.
All right. Are we? Yeah, you nailed it. Are we lighting this, or is it symbolic?
Symbolic.
yeah. All right.
Oh, okay. No one. We're not going to light it at all and blow it out. Is that only for? It's a birthday, isn't it?
Yeah, it's,
I don't have a lighter.
we can
This-
skip that.
This
All
was
right.
25 years ago. I would light
What are you
it.
looking forward to?
I'm taking my kid to a Broadway show. I don't know if I mentioned it. So I would be with you guys at dinner, obviously.
Loves
These tickets,
Broadway, this
these
guy.
tickets
I
were
like Broadway.
bought a long time ago. Rob, Heathers,
Heathers.
where is that in the pantheon of 80s movies?
That's like
Top half?
Yeah, cult classics, you know, that would be up there.
It's Winona Ryder, so instantly that elevates it.
Is that Columbus? Who did that?
Who made Heathers? It's super dark. It would not have been Columbus. They're murderers. They're in high school and they're killing their classmates. So I don't know who the anyway. And we're going to Santi. You know Michael White, Chef Michael White. Yeah, Santi is his new place. I've never been.
He's
yet.
kind of cool.
How many
He's
names
a
is
little
this guy
bit cool.
dropping?
He's a little bit
I've never
cool.
been. All right.
All right, it's enough.
All right. Anyway, we're gonna wrap up so I can go eat dinner, guys. I want to just thank everyone out there in Spotify land, Apple Podcasts. Come on, hit my applause button. YouTube, social media, Instagram. All right. Got a delayed response. I don't care where you watch the show, where you listen to the show, whatever works best for you. We love you. Thank you so much for watching. Thank you to our amazing guests all these years. JC Parets, thank you so much for being a regular here on the show. Thank you guys to the crew, to the fans. We love you so much. We appreciate you. And as I've said before, we will be here forever. We are never leaving. I hope that's dawning on people. We will be here forever. Thank you. We'll see you on the 400th episode. We appreciate it.
All right, 400.
All right. And that's a wrap.